session is really about helping you switch mortgage if that is what you're thinking about doing. And if you're on social media and if you follow any of the gurus, shall we call them, on social media, that tell you to switch mortgage, switch mortgage, switch mortgage. And whilst in general, yes, it's good advice, what we're trying to do, hopefully, this evening is give you all the reasons why you should, and more importantly, some of the reasons why you may not wish to switch. And just because you can doesn't always mean that you should. My name is Pascal Kern, guys. I own a company called Advice First Financial. I've been advising people for well over 30 years on helping them make prudent financial decisions. And today is just it's another one of the sessions we're trying to help people to do that. So we're going to go through this in a series of questions that hopefully a lot of these questions are sort of in your head anyway. And we'll do the presentation sort of answering the questions, but we also then, if you have any questions at the end of the session, by all means, put them up and we'll deal with them after it. So I've kind of set out the presentation in 12 questions and why people would switch. Why would you switch at all? Why is not a good idea to switch? Can you switch if you're on a fixed rate? Obviously, is there break costs and important? How much could you save? Give you a couple of examples around that. So if we switch over, then even can I release equity when switching? There's a couple of good questions and a couple of questions that we get all the time, every day and every week in relation to this. And obviously, drop your questions in the chat box, and we're more than happy. If we don't hit your question, we're more than happy to sort of deal with it as we go on the way through. So why would you switch in the first place? And there's a number of reasons. There's lots and lots of reasons why people would switch. And the first one, obviously, is if you can get a better rate. And that's probably the most common reason people engage in the switching conversation at the start. And if you have a fairly substantial mortgage, and if you have a fairly substantial length of time on your mortgage, even a small difference compounded over the years can make a difference. The other reason people would switch is to release equity. Maybe they've got other debts that they want to tidy up. Maybe they've got more month than money. Maybe they're just under pressure, or you want to do home improvements, or there's something in your life that you need to either get an injection of cash or you want to tidy up bits and pieces in your world. Lots of people engage in switching when that happens. Changing the term or the structure of the mortgage, separation, maybe one person coming off the deed. There can be a number of reasons why you'd want to change the actual mortgage structure in itself. You'd want to shorten the term, longer the term. If the bank that you're with doesn't do a fixed rate, like we would have a couple of banks where there would be with certain lenders that, or people call them vulture funds, and maybe switching is very, very important in that sort of case. So it really depends where people are in their life cycle as to the reasons why. And sometimes it's just for better service. They're just not happy with the lender that we're with, and they're just not being given a decent service. The important thing to do is explore the reasons why it would work for you. And maybe the reason that you'd need to look at a switch isn't on the board here. But if there's a question and it's not here, by all means, give us a shout. We're more than happy to sort of take it through. When would you not switch? And again, when I said at the start, just because you can doesn't mean you should. A couple of the reasons that we've come across that we would advise people not to switch. Short-term remaining. If you've got 2 or 3 years in your mortgage, at this stage, switching isn't going to really, unless the rate is very off kilter, it's not really going to save you a lot of money by the time you factor in the costs of actually switching in the first place. And that's the point. There are costs that we need to be aware of here. If the lender that you're with is going to charge a large break fee to get out of the agreement that you already have, this can, the savings that you're going to get on a monthly basis, the break-even point may be too far out. And again, it doesn't make sense. If you're planning to move over the next couple of years, again, I would take advice before you would switch. And if you're currently in arrears, or if you had arrears over the last couple of years, you may not be able to switch. So just, again, you might love to switch and maybe it'll be a very good idea for you to switch, but because life is maybe a bump on the road, it may cause you maybe not to be able to switch. But again, have a chat with a broker around how you can fix that up and make sure that over time you can actually go through that and help you. Again, always seek advice. A broker will be able to tell you whether switching, one, is a good idea, and whether two, you can actually do it at all or not. Can I switch if you're on a fixed rate? So if you're in a fixed rate with your existing lender, yes, you can switch. But the big question is there a fee? So the first thing we would say is speak with your own provider first and see, listen, one, do they have a better rate for you? Whatever rate that is, and whether the reason is that you feel that you'd like to switch. Maybe the provider that you're with will maybe look at their own rates and see, is there something better? But also, if you're in a fixed rate, what's the break fee? And quotes are time limited. So typically valid around 10 days. So they'll give you a price and say, listen, if you break out, this is the cost. But you need to keep an eye on the cost and make sure that if there is a break fee, how long does that last? On a variable rate, there isn't. So it's only, the break fee is only on a fixed rate. So if you've got a 10-year fixed or a 5-year fixed or a 3-year fixed, and you want to break out of that, they can sometimes hit you with a fee. Now, not all the times. If the rates now are higher than the rates that you're on, there generally may not be a fee. If you're in a variable rate, there is no fee. You can clear a mortgage on a variable rate whenever you want. But when it comes to switching, my advice is, rather than running to Mr. Bank B or other bank, speak with your own bank first and see, well, what can they offer you? What other rates do they have? Are they willing to give you the money that you need if it's equity release? Are they willing to do what you need them to do? So start there and then build out. Go to a broker. He'll be able to tell you anyway whether your existing bank will be able to do this. If there is a break fee, and the banks give you, when you ask them for the formula of how they do this, they give you something that you'd need to be a rocket scientist to figure out. But in plain English, how they actually work it out is the balance of your mortgage multiplied by the rate difference multiplied by the time. So obviously the balance, if we say 250 grand remaining, your current rate minus today's equivalent market rate. So generally they price it against the standard variable rate. So if your fixed rate is less than the variable rate, the now variable rate, there will be no break fee. If it's the other way around, there may be. And then the time remaining. And those three are basically that formulates the formula for them figuring out whether they're going to charge you a fee or not. But as I said, if the now rate is more expensive than your current rate, the likelihood is that there will be no break fee or no break fee at all in coming out of your fixed. How much can you save? Well, obviously, this is for illustrative purposes only, and it obviously depends on the amount of time, the amount of balance on the mortgage, the rate and the new rates. But rates at the minute are running from 3%. So one of the cheapest rates in the market at the minute is 3%. But I've used a sort of a middle of the range rate. So we're looking at a balance of 250,000 euros. We're saying, listen, there's 20 years left on the mortgage. And currently you're sitting on a rate of 4.5%. If we were to achieve a new rate of 3.75, well, the difference there is 99 euros a month. And over a year, obviously, it's 1188, and over 20 years is 23 grand, just by that little bit of a move. So in terms of money management, is it worthwhile looking to switch a mortgage? Absolutely. Of course it is worthwhile looking, but it doesn't necessarily mean that you should. This is the kind of work that you should do before you actually push the button on switching. Where is the savings? What problem is it solving? And what's the math? And again, this is illustrative only. We're not taking a fact of any charges. We're not taking a fact of any fees. We're not taking it that if the bank's going to charge you a break fee. We're just saying, listen, there's the math. There's where to start and then work back. So what does it cost? Actually, sorry, this is a break even. If we look at that example, and again, it's a good calculation to make. If you're going to save, how long does it take you to recoup the cost of doing it? Now, we've taken the last example and we said, well, listen, if the cost to actually get to the switch and do the switch is 2.5 grand, then you're saving €99 a month. Well, in 25 months is the break even. If there's 20 years left on your mortgage, well, obviously the savings are quite substantial over the rest of the term. Where it's not worth it is if there's only 4 years left on your mortgage and you happen to be saving 40 quid a month, not 99, because the mortgage balance is down a lot. Well, it's going to cost you 63 months to break even. And again, that doesn't make sense. So again, it's about sitting down with an advisor and saying, well, listen, what actually makes sense for us to do this? One of the other things that people ask us all the time, well, what's the cost of actually switching? And again, you're back to legal fees, and that's probably the biggest fee in all of this. And I've kind of given a range between 1,500 and 2.5 grand. Different solicitors, different charges, price round solicitors. I always tell people, listen, get at least 3 quotes for conveyancing on your mortgage, because solicitors do vary in price. There is also a valuation fee for your go-to bank, anywhere between 150 and 250. Bank fee, obviously, we have no idea. There may not be a break fee, and then possible broker fees. Some brokers charge fees, some do not. If the broker does charge a fee, generally the savings over time will give you a lot better value, especially with a broker that charges a fee. And what I mean by that is if the broker is not charging you a fee, then you're only going to get exposed to lenders where they get commission, because a broker will not work for nothing. So if a broker is not charging you a fee, ask him which banks does he have access to, because chances are he'll only be taking you to where he's going to get commission from. That may not be full market. Many lenders also offer a thing called a cashback, and we're going to deal with that a little bit on, that can offset a good bit of these fees as well. So what is the cashback? So when you look at any sort of a switcher, you'll hear banks saying, well, listen, we'll give you 2% back, and if you're still with us in 5 years, we'll give you another 1% back. And all of these cashbacks are useful, and it's great to have them because it is real money. They will give you back. So if you borrow, in this example, the appeal of 2% cash back, if you borrow 250 grand or you switched your mortgage for 250 grand, it's a 5,000 back in your bank account within 30 or 60 days. And that all feels fantastic. But the problem I've got is that the products that they give you the cash back on are not the cheapest products. So you're not going to get a cash back on an interest rate of 3%. You'll get a cash back on an interest rate maybe of 3.7%, but not at 3. So cashbacks, yes, important to factor into the equation to offset some of the costs, but it's not the only factor. Bring it into the equation, absolutely, but it's not the only factor. So cashbacks they're not bad, but just understand where they fit in the scheme of the whole thing. Can I release money when I switch? Now, this is one that we're getting a lot of inquiries on. And you can release money now for pretty much any purpose, but not with every bank. So there are a couple of banks of Ireland, a couple of the newer banks that have come into Ireland, and they're quite open to sort of rolling up short-term debt, equity releasing for doing other things. We've had one going through at the minute where they're equity releasing because they want to invest in a holiday villa along with some of their family members over about Spain, and we found a lender to be able to do that. We have also people at the minute where they've got other debts. They have a small mortgage on the house, but they've got other debts, credit card debts, car debts, and they just have more month than money. And right now, getting access to money for them is very, very important. And again, we have found a lender to do that. But not all lenders will do everything. Most lenders will do home improvements. They'll allow you to equity release to do home improvements to the house. They'll allow you equity release for college fees or education, even for say, medical costs. Debt consolidation is slightly more restrictive, and not every lender gets into that space. Invest or major purchase, so vehicle, business funding, family support, A couple of lenders will let you do that, but not all. So again, it's important to speak with a broker depending on what your circumstances are. You may have one lender, you may have seven. They will know. But each lender treats equity release slightly differently. So it is important to sort of sit down with everyone that has a sort of a pan market view of what's actually going on, because you could go to your own lender and get refused and think, well, listen, this is not possible. Speak with a broker. It may be very possible. Am I likely to be eligible? A couple of factors in this. Equity in the home. You can borrow up to 90% of the value of the house. So if there's equity in the house, then yes, that would be one of the criteria to be eligible. Obviously, your income, stable, provable income. Lenders will want about 6 months current employment record just to show that you have a steady income stream. If you're self-employed, they want you to be minimum of 2 years. There's one lender now looking at 1 year. But self-employed, again, the criteria can be different because you could have, and a lot that's happened now in the IT sector, especially where you have a lot of people that were employed and then they went self-employed, but it was more for tax reasons that they were self-employed. A lot of lenders are comfortable dealing with that rather than having it just 2 years self-employed. Again, criteria difference, but certainly have a chat with a broker. Obviously, your credit history is a massive issue here with eligibility. If there's missed payments, if there's defaults, if there's arrears, it will more than likely impact what you can do. And obviously the property type. I mean, non-standard construction, holiday homes are difficult to get a remortgage on. Apartments are fine. Standard residentials, there isn't an issue with this. Again, lenders' appetites vary, so have a chat with a broker to be able to take you through all of this sort of stuff. How long does the process take? Traditionally, I would say between 6 and 10 weeks. Now, that's if all documents in, bank statements ready and clean, solicitors briefed early, property valuation scheduled promptly. All of those things can help it. There are a couple of lenders in Ireland at the minute that are very, very quick because they are very much digital. And they're not your AIBs or your Bank of Ireland's, which are very older and more archaic systems. Banks like Nua, banks like Moco, these boys are moving a lot quicker because they're younger, and they're built on digital platforms. So their closing time is a lot quicker than this, but this is what we're finding is sort of the average. And in fact, the average is probably closer to 10 than 6. If I was to be honest, there's a few of them that can get it done in 6, but definitely it's closer to 10 and longer. What does the switching process look like? Obviously, initial review, quick chat. Have a chat with your bank first. Have a chat with a broker. They'll know what your existing bank can do anyway, but they'll also know what everyone else can do as well. So have a chat, figure out what is the best way to go. What is the best lender to do what you want to do? Gather the documents, the pay slips, the EDS, bank statements, ID, all of that. The things that you needed for your initial mortgage are pretty much the same stuff that you're going to need for your switch as well. Same idea. Lender selection, obviously, different lenders, different prices, different cashbacks, fixed and variables. Shop around. Application and underwriting, pretty much the same as everyone else. You still got to. The only difference is that you don't have to prove affordability for the mortgage because you're already paying it. Now, if you're taking extra money, there might be a little bit of affordability question. But if you're just switching for a rate, you're already paying it. If you're going to actually save money, affordability is already proven. So it's already there. Application and underwriting. Listen, if there's no issue with your existing mortgage, there's going to be no issue with this one. Valuation and legals. Again, the lender that your go-to lender will want to value it. And then your solicitor obviously handles all the conveyancing and all of that. New mortgage drawdown goes to your solicitor. They pay off the old mortgage. You get the dough. That's pretty much how it works. So a broker like ourselves will manage the conversation between the lender and you. They do the paperwork. They present your case. They chase everyone in the process. So it leaves it a little bit easier for you that you're not the one doing all the chasing, A good broker does all that work for you. That's what they do, and they know how to do it and do it well. How does a broker like us make the difference, and what's our approach? If you go direct, you go to one lender, you get their criteria. They will or they will not do it. They will have a better offer. They won't have a better offer. You handle all the paperwork. You do all the chasing. You chase the bank. You chase the paperwork. You chase. With a broker, first thing that happens is you get a whole of market view. They know what the lending criteria is, and they can compare one lender with another, where your existing lender may not be interested in or able to help you do what you're about to do, but another lender might. So a broker will automatically know that, and they'll package your application. And one thing that people forget is that your mortgage application is like a CV. It's like a job application. And in this instance, your bank is the employer. And the better the package in your application, the more likely it is that you're going to get approved and approved quickly. And that's what a broker does. We chase banks. And to be honest, it just makes the journey a lot easier, because the mortgage journey, even though you've done it before, it can still be stressful. If the broker that you're talking with charges a fee, it's usually factored. The long-term savings usually way outweigh whatever fee a broker will charge you. Now, not all brokers charge, by the way, but again, be careful with that one. Just if they're not charging, just be cautious and be careful of who they're actually dealing with. Couple of questions. Does switching affect my credit rating? No, it does not. If your credit rating has issues, then switching your mortgage obviously is not going to affect that in any way. Can I switch if I'm on a tracker? You can, but caution. It really depends on what tracker. We're seeing trackers quite a lot. We're seeing quite good trackers, and we're seeing quite bad trackers. And the difference between the two is the ECB margin over, the bank's margin over the ECB rate. If you're on a tracker that is 1.25 or below, that's a pretty good tracker. If you're on a tracker that's 1.25 and above, it's not as good. But be careful. You can't switch the tracker, but you can talk to your existing lender. They do have a tracker plus one product that they can introduce. So again, speak with your broker on that one, but just take advice on the tracker piece. Do I have to use my current bank? No. You can switch to lender without them. You don't have to bank with them. You can hold your account with your current bank and be your mortgage with a different bank. There isn't an issue with that. What if I'm in negative equity? You won't switch unless you can make up the difference with something else. So we had a case quite recently where the mortgage over a couple of years, there was a bit of a challenge on the mortgage in terms of the guys couldn't pay it. The mortgage is slightly more than the max lend to value that we can get, but they had a little bit of extra money they were able to bring to the table, so we were able to get them switched, but the mortgage didn't pay off the other. They had to bring a little bit of equity to the table themselves. But if it's just straightforward negative equity, no, there probably won't be. It's probably not possible. Well, I have to start the term over again. No, you can set the term of the new loan with the new lender at whatever term you like. You can push it out or pull it down. If you have got affordability and your finances work, you can actually shorten the term. If that's what works for you, you don't have to go back to day one. Can you switch more than once? Absolutely. I have people that switch every 3-4 years because that suits them and that's what they want to do, and they keep getting better deals. Now, I'm not saying that that's the right thing to do. It works for a few people, but it is, yeah. I mean, you can switch as much as you want, but just make sure that the finances make sense, obviously. So if you're going talking to a bank, generally on a switching conversation, 30 minutes, generally, and maybe even less, will actually tell you whether or not it makes sense to switch and whether you have the option to switch. But what kind of information would they look for? Is they look for the current mortgage details, obviously. Recent pay slips. They look for any specific goals. What are you trying to do? And that's probably the biggest thing is what is it you're actually trying to do with the switch? If you have an annual statement, bring it with you. And think about your outgoing. So if you have a bit of a budget in your head of what's actually happening, it's a good figure to have that. It's not necessarily that you have to have all this information, but if you have the information, you don't have to have all the paperwork just to have the conversation. But know your numbers. That's probably the biggest thing. And then if you have any questions, talk to the broker about it. But it is important, and I say that will quickly tell you whether you could, should, or be able to actually switch. But definitely know your numbers before you do it. Guys, we jumped through that quite quickly. If there's anything in this that you want to have a chat about, by all means, give us a ring. Jump onto our website and book an appointment. We're more than happy to sit down and have a chat with you about switching your mortgage if it's something that you're sort of even thinking about, considering, wondering whether you would be able to do that or not. Jay, is there any questions?
Yeah, I don't see any questions in the chat yet. I don't know if guys, if you have any questions apart from what Pascal covered, feel free to use the chat box on the side or below the like our faces here on the screen, depending on the device you're using. I'll give you a few seconds.
Okay.
Yeah, if you don't like I said, there's a link on the chat there that you guys can follow, and then just mention that you attended the webinar, and our team will look after you.
Hey, thanks very much for taking the time, and hopefully you got something out of that. And by all means, get in touch if you have any questions. But for now, look after yourselves. Be well. Bye bye.